Welcome to The Explainer. Today, we're going to pull back the curtain on financial analytics. We're going to transform it from something that feels like a chore into what it really is, your most powerful strategic tool. We'll show you how to look right past the raw numbers and start seeing the story they're actually telling about where your business is headed.
Okay, so here's what we've got on tap. We're going to start by shifting our mindset, moving from just reporting numbers to really analyzing them. Then, we'll build out your core toolkit, your financial dashboard. After that, we'll do a deep dive into 3 specific power metrics you need to know. We'll see how to use them to forecast the future, and then we'll wrap it all up by showing you how this gives you a serious strategic edge.
All right, first things first, we have to reframe how we even think about financial data. This is one of those fundamental shifts that, once you make it, changes absolutely everything. So let me ask you this, and it's a question every single manager should really think about. Are you just reporting numbers, or are you making them work for you? See, most businesses, they're pretty good at reporting what happened last quarter. But the real magic, the real power, comes from understanding why it happened, and then using that insight to predict what's just around the corner. Think of it this way, and this is the perfect analogy. Financial reporting is like looking in your car's rearview mirror. It tells you exactly where you've been. It's important, but you can't drive forward looking only at that. Financial analytics? Well, that's your GPS for the road ahead. It uses all that past data to guide your future moves and help you navigate what's coming. So if analytics is our GPS, how do we actually build the thing? Well, it all starts with your dashboard. Every manager needs a quick way to check the vital signs of the business, and that's exactly what financial ratios are for. They are your at-a-glance health check. Now, these ratios, they usually fall into 5 key buckets, which are kind of like the vital signs a doctor would check. You've got profitability. Are you actually making money? Liquidity, which answers the simple question, can we pay our bills next month? Leverage shows you how much you're relying on debt. Efficiency, well, that measures how well you're using the stuff you have. And finally, market valuation tells you what the rest of the world thinks you're worth. Quick tip, if you're ever short on time, check profitability and liquidity first. They tell you if you're earning and if you can survive.
So what's the bottom line here? It's that mastering these ratios gives you an immediate, high-level snapshot of your company's overall health. It's really the first step you should always take before you dive any deeper into those spreadsheets.
Okay, so we've checked the basic vitals. Now let's go a little deeper. We're going to zoom in on 3 incredibly powerful metrics that give you a much richer insight into your company's performance, its value, and its real potential.
First up is EBITDA. Now, I know the name sounds super complicated, right? But the concept is actually pretty simple. Think of it as a pure measure of how profitable your main business operations really are. It strips away all the noise from financing choices, tax stuff, and accounting rules to get to the true performance of the core business. And this is where it gets really useful. It gives you a clean, apples-to-apples way to compare your operational efficiency against your competitors, even if they have totally different tax situations or debt levels. And that's exactly why investors love it. It helps them see a company's true earning power. Next on our list is net present value, or NPV. This is your secret weapon for making those big investment decisions. It answers one simple question: is this project actually going to make us money? And it does that by using a really critical idea called the time value of money, which just means that $1 in your hand today is worth more than a promise of $1 tomorrow. The logic behind it is actually pretty brilliant. It takes all the money you think a project will make in the future and calculates what it's all worth in today's dollars. Then you subtract what you have to spend to get it started. If that final number is positive, that's a financial green light. It means the project is expected to create real value for the company.
And finally, we've got return on equity, or ROE. Now, this one is crucial because it answers a question directly from your investor's point of view. How well are you using our money to make a profit? It's really a direct measure of how profitable you are from the shareholder's perspective. A higher ROE means you're squeezing more profit out of every single dollar of equity that's been invested in the company. And well, that's exactly what your investors want to see.
So you see, when you bring these 3 together, EBITDA, NPV, and ROE, you get this powerful, 3-dimensional view of your business. You see its operational health, its future value, and its shareholder return. It really is the complete picture.
Okay, we've got our analytical tools in hand. Now for the really fun part, using them to look into the crystal ball and actually forecast what's coming next.
This is where financial analytics really comes to life, you know? It's where we stop just looking backward and start making intelligent, data-backed predictions about things like future sales, revenue, and what our customers are going to want. We're literally building a roadmap for the future.
And hey, this isn't just some academic theory. This is standard practice for giants like Walmart. They use years and years of their past sales data to accurately predict exactly what they'll need for big events, like the holiday shopping season. It ensures their shelves are stocked so they don't miss out on a single opportunity.
So how does this actually work? Well, it's kind of like baking a cake. You start with your main ingredient, your own historical sales data. Then you add in some seasoning, like broader market trends and economic indicators. And finally, you use these proven algorithms to mix it all together and cook up a really reliable forecast.
All right, let's bring this all home. How does all this stuff give you a real, tangible advantage out there in the marketplace?
The journey we've just taken, from those basic ratios all the way to predictive forecasting, that's what truly empowers you as a manager. You get to move beyond just reacting to what happened last month and start making proactive, informed decisions that actively drive your company's growth and success.
So, if you remember one thing from all this, let it be this. Financial analytics is not just for the finance department anymore, not by a long shot. It's a critical, core skill for any manager who wants to lead effectively and build a real competitive advantage in today's world.
We've just handed you the foundational toolkit. So the only real question left is, what are you going to build with it? Which one of these tools will you pick up first to start shaping your company's future?